Good afternoon. This is Tom Aspray with the Viper Report. It's Thursday, March 11th, a little after lunchtime, heading into the final stretch of a pretty strong day. Looking at this hourly chart was featured in the last Forbes article. There's a link in the email. Shows you that a week ago, Friday, we saw some early signs of bottoming here. It was a pretty rough week, Fortunately, we closed strong. Otherwise, it would have been a down week, but we had a couple of good drops, but lots of big swings in both directions. The analysis heading into this week suggested a rebound and a rally phase that was borne out by the futures early Monday. This is one of the charts I discuss frequently in the publications as well as Forbes. This is the percentage of Nasdaq 100 stocks above their 10-day moving average. So you can see back here at the October low, we got down single digits here. And also, at the January correction low right around in here, we got very low too. This we got down to just about 9, I think, 9.7 or so. As of last Friday's close, we closed at 32, up sharply from the lows. After 2 days of trading, you see we rallied even further. As of the close on Wednesday, we were 47%. So it's expected we could get anywhere up here to 70 to 80%. Once it gets up to 80%, as it did in early February, that was a sign that the risk is really high on individual stocks. It's been a really good stock picking environment, and this is one of the tools that helps me determine whether I want to take new positions or not. This is one of our long positions heading into the week. We're in there about 61.98 down in here. And this chart is as of about 2 o'clock in the afternoon on the 9th. That was Tuesday. And you can see we got right up into this is the weekly R1 resistance up in here. I started to see some signs that the stock was losing upside momentum. You can see lower peaks in the volume. OBV, was making lower highs. That was not a good sign. So I recommended clients sell out their long positions because I knew Oracle had earnings after the close. This is what a current chart of Oracle looks like. We gapped sharply lower today. We traded down as low as 65.43. We got out about 73.07. This was the morning table from today's report. You can see the Oracle position recommended on 211. We closed it out, as I said, on 3 nights, just about a month, but a really good gain. And this is the rest of the positions we're having. We'll talk about a few of these because 3 of these were established just based on Monday's action. In my weekly scan, there were a number of insurance stocks that looked pretty good. My choice of the 4, I think I mentioned in the report, there was AIZ, EIG, and Travelers, was Progressive. So the order was on to buy it on the 8th at we got in long here at 89.52. It got down as low as 88.69, just missed our second buy level, and now it's acting pretty well. We're up at 93.19. We're up 1% today. You can see the relative performance broke its downtrend here, and the OBV popped back above its moving average. That set up the buy recommendation on Monday. We're looking for a move up to this 96.04 to 97 area. Another stock I liked before Monday's open was Cardinal Health. We got really lucky here. Our buy level was at 53.69. We opened, as you can see here, at 54.06, traded as low as 53.62, then closed the day at 54.70. We hit a high today of 56.58. We're just trying to break out this downtrend. You can see line A convincing breakout above that gives you, targets that are by measuring techniques are in the 60 to 62 range, and you can see that the monthly R2 pivot, which we've talked about, is at 58. Relative performance is positive, has not yet broken out, but the OBV is positive and rising. The third recommendation was Archer Daniels Midland. We took a good profit out of here I guess in February sometime. Had this correction. Wasn't fast enough to, you can see this is the beauty of pivot point analysis. You can see that it got down early in March, had a low of 54.94, and the monthly pivot was at 55.03, and it's been up after that. So we got in here on Monday's opening level, a little bit lower. We're bumping into resistance here at line A. I think it will be overtaken because based on the daily studies, you can see the RS is positive. The OBV is continuing to lead prices. So then we're kind of looking for a move up towards that 63.88 area in the next week or so. Another chart that I look at frequently, this is the 185-minute chart of the Emini futures. The Stark bands work really good here. You can see that back at the end of February we got down to the lower Stark bands, had a nice rally, and then this was heading into the weekend. Friday's rally started to turn the MACDs back to positive, and we finally, you can envision a downtrend here that we broke out, in Sunday's trading, and it's been really strong since. Right now, we're getting back towards the old highs around 39.59. We're also near the upper Stark bands up here, so that doesn't favor new positions right now. I tend to try to recommend them, when we see a pullback like this. That was, and even more so on the 8th, we had a pretty good entry point here. MACDs look like they could roll over, and the MACD histogram, is something I teach about and developed decades ago, is a pretty good tool. Looking at the big picture, this is a chart of the SPY with 2 AD lines. You can see we're about ready to close, testing that high from September. The cash has made it above that 294.17, as has the SPY. We have a high of 295.41, and so that if this completes that trading range, we have significantly higher targets. Minimum, sort of next step is like around 404, and then potentially as high as 410 to 414. So how do we trade this? Well, right in here, given we're going to sign the bill probably for the COVID relief, there's probably going to be some backing up of prices in the next day or two, where we'll be looking for a shallow pullback to add to long positions. You can see the S&P 500 AD line has made a new high yesterday, as did the stocks only. They still show a pretty positive trend. Only the QQQ AD line was lagging. In terms of the high-tech ETFs, it looks like they could still use one more pullback. Most of my daily studies, which is what I follow, are not positive yet, though some of them had a good bounce today. The day's not over, so it'll be good to see if we can hold those gains into the close. If you're not in the market and you would like to start establishing positions, I would encourage you to take a look at either the Viper ETF or the Hot Stocks report. We've had, last week we had, I think, 3 or 4 reports during the week because of the volatility. And, we put an interim update on that Oracle position on Tuesday because we saw the action. We wanted to take some nice profits before the market turned lower. And turned out it worked in our favor. I appreciate you turning in, and I hope you find my analysis beneficial. Thank you.